it has been an operationally strong quarter for Berger Paints. Deferred tax credit boosted the bottom line while margins saw an expansion. Let's discuss the quarter gone by with Abhijit Roy. He is the MD and CEO of the company. Abhijit, good morning and thanks for taking the time out. Certainly a very strong quarter for you operationally. But let's talk about the top line. If you could give us an indication with respect to volumes, firstly, how that has panned out, and what is the current underlying sentiment in terms of the industry as a whole?
So volumes were in double-digit growth. Decorative protective coatings, did well. Both, clocking value growth also in double-digit. The automotive part, which is, about 8 to 10% of our business, that had a degrowth of about 30%, largely due to the commercial vehicle and two-wheeler segments where we are present. So that's a small part, but it dragged down the overall value growth. Profitability has been good, and of course, due to the tax benefit, the PAT has also been, much better than expected.
Mr. Roy, you said double-digit volume growth. Correct me if I'm wrong. I think last quarter it was somewhere about 16%. So is it in line with that, lower than that, or higher?
So it's lower than that. Largely on two counts. One, of course, the rains have been a bit of a spoil sport, in August and September, which depressed a little bit of the demand. But we were at around 13% in terms of volume growth.
Okay. 13%. Just a word on pricing as well, since you said there was a bit of a value growth seen as well. So what is the effective price hike that you took during the quarter? Also, if you could tell us now in the current quarter if there is any tinkering that has taken place with the prices?
So there was no price increase. In fact, there was a little bit of a price decrease in enamels, which we had taken in the last two quarters. So that was, and no increase so far has been taken. So overall, the value growth, though in double digits, was slightly lower than the volume growth.
Okay. Mr. Roy, can you also tell us about the impact of raw material costs that have had on your gross margins and what we can expect in terms of outlook for gross margins specifically?
Raw material prices have been benign. There has been no increase or decrease, in any significant manner from the first quarter. Compared to last year, of course, it is lower. And hence, you see the gross margin expansion which has happened, especially on the industrial side, where the expansion has been larger. We expect this to be sustained over the next two quarters.
Could you also give us a sense with regard to your products? How was the growth from the premium products and the other? The 7% top line growth has been boosted. Is it from the premium products or more products from the lower end were sold during the quarter?
So mostly from the premium products. The lower end had a reasonably decent growth, but the premium products had a higher growth rate.
We've been receiving mixed commentary, at least from a couple of these FMCG companies, with regard to rural growth, Mr. Roy. So what sort of exposure do you have? How much revenue do you derive from that market? And for a company like yours, how did the rural growth pan out?
So in our case, it's not pure rural, but, we go to this tier 2, 3, 4 towns. The growth rate there, in fact, was higher for us, than the metros and the tier 1 towns. So ours is sort of a reversal of what the FMCG companies have been saying. Our growth rate in the upcountry towns has been higher than the urban centers.
All right. And also, sir, if you could also tell us about how festive season has panned out. And secondly, as we move into the months of November and December, what is the on-ground traction currently in the third quarter? If you could give us any indications with respect to growth.
So we don't predict, that, but, all I can say is, a little bit of dampening of the festive spirit, in the western and the southern markets, because of the rains. The north central areas did very well, and there was no problem there. Going forward, we expect that, the postponed demand due to the rains will come back. So November, December, Jan, Feb, March, we hopefully look forward to better times.
Before we wrap, then give us a guidance, what sort of growth on the volume front for the full year now that we can expect?
So you know the half-year results already.
Yes.
We have volume value growth, somewhere near the mid-teens. We are hoping that it will sustain at those levels, on the full year scenario.
But do you think the second half could be better, or it's going to be in line with how the growth has panned out so far?
Difficult to say. We don't predict, anything, but we are expecting that, some of these postponed demand should come back, and that should help.